all, well, not all, but for some of you joining us here this afternoon, and I really applaud you because it's always a very difficult fight against the food. So thank you for attending our panel, and I hope more people are coming in because we have the most awesome panel here in the industry. So the people out there are really missing out something. But anyway, so I would like you all, my panelists, to introduce yourselves because you do a much better job than I would. So Anton, the voice of the industry.
Thank you very much. So Anton Gaylard, I'm with CrossFin. We're a fintech investment company. We invest from early stage startup all the way through to sort of Series A, Series B type businesses into growth equity, focusing on Africa primarily, but other emerging markets, and very much fintech focused. So very excited to be here today. Thanks.
Hello, good day. I'm Sebastian Lacour. I'm a co-founder of PayGenius. PayGenius is a payment operator, and we help African merchants collect online payments in multiple currency and supporting various payment methods. We've been operating for 10 years. We're based out of South Africa, and we've got merchants across Africa.
Hi, everyone. My name is Collins Fomba. I'm a founder and CEO at Iomi. It's a Cameroonian-based fintech. At Iomi, we support banks and regulators with digitalization of their processes, and we help them accelerate financial inclusion through the provision of digital financial services. We've been mostly focused on the Francophone West and Central Africa region. We are currently expanding to the North African region, East and South Africa too.
Thank you very much. So my name is Emmy van Halder. I'm an investor from the Netherlands, and we focus on African solutions for African problems. So I'm happy to be here today as well and present this beautiful panel. I must say that I've never invested in fintech or in anything this complicated before because I really thought it was too complicated. But I'm here also to learn with all of you. And I'm just eager to learn a bit about the landscape. I think many of you will. So I'm asking Anton to draw the landscape for us for Africa.
Thanks. I mean, the global cross-border payments market is huge. It's over $156 trillion worth. And it's projected to grow at 5% a year to about $290 trillion by 2030. The challenge, though, is of the $156 trillion of cross-border payments, $156 trillion of that is actually business to business. So it's not getting down to the B2C and the C2C side of the market, which is where it's really needed most, particularly internationally because of large regulatory compliance and red tape. So if you're moving a lot of money for business, you can afford the pain and the time it takes to settle cross-border transactions. But when you move down, you're just trying to get money to a friend. The costs are still very high. And it still takes time for funds to settle. I mean, there are still stories of workers in, for instance, South Africa, giving money to a friend who's getting on a bakkie and going on a 3 or 4 day car journey back to Malawi or wherever, and taking money for someone else to give to a family member. And they feel that there's more trust and it's more cost effective that way. But what we have seen is the advent of obviously mobile wallets. I think there's about $1 trillion worth of mobile money flowing through the system at the moment, and over 86% of that is actually in Africa. So the advent of mobile wallets and the disruption coming through fintech is bringing the costs down and reducing the barriers, and it's actually driving financial inclusion because it's enabling money to move into Africa. And as soon as money arrives in someone's wallet, they are now financially included, particularly if it's on the digital rails. So it's definitely becoming more prevalent. And as we drive interoperability and we bring the barriers down for cross-border payments and increased liquidity between different currencies, this is a really good catalyst for financial inclusion.
Thank you so much. I think financial inclusion is what we really need on the continent. So we need to also remove the barriers that are there that, you know, prevent us all to come to that level of financial inclusion in all different African countries. And I think you, Sebastian, you have some thoughts about the barriers here on the continent and how we could maybe remove them?
Yes, thanks, Emmy. So from our perspective, remember we're operating from a C2B perspective, consumer to business. We help merchants, particularly in the travel sector, collect payments from overseas, from their clients. I think there are there's four main factors that impact cross-border payments at the moment. The one is cost, you know, making cost efficient, speed, particularly when it comes to international bank transfer, access, so financial inclusion we're talking about, and transparency, making sure that everybody knows what they're paying and when. Being an operator, particularly processing card payment for like European, American type of clients visiting South Africa, but also we've got clients from Africa visiting other countries in Africa. Where we've seen a lot of friction is operators sending payments requests in their own currency into the US or into Europe, and the European client not understanding what this currency means and whether it's secure to make this payment. So some of the innovation we've brought in there would be the ability to pay in your currency, which has helped a lot increasing the cross-border transactions. In terms of it helped like processing. It helped on the adoption of the payment, but it also helped on transparency because now the customer is able to know exactly what he's going to pay at the time of transaction, rather than waiting for his bank statement to figure out how much this transaction cost him. So this is one of the examples of the innovation that are being brought onto the space. Some of the innovation we've partnered, recently launched PayPal partnerships. We've got a lot of clients coming from the States. And what they've done that works quite well is if a client chooses to pay with PayPal in America, they've got the ability to opt for a buy now, pay later option where they get payment plans for their trip over 10 months. So this type of solution has worked well for the overseas payers in developed countries. And for Africa, I think, as Anton mentioned, the wallets have done, and the mobile operators have done a fantastic job in terms of driving financial inclusion and enabling those payments to come through. So I think those would be my key points.
Thank you so much. And Collins, you are obviously addressing the Francophone market. And we have had some discussions before, also very political. We won't go into it now, but if you want to talk politics in Francophone Africa, find us later. But I think you are at a very fortunate position, actually, to have a little bit less red tape internationally in your area. Can you address that? And do you think that the whole fintech and cross-border will be championed by your countries in North Africa and West Africa?
Okay, I think when it comes to the Francophone area of Africa, especially the sub-Saharan Francophone area, it has a particularity when we come to the financial system, in that they all function as zones, as regions, which is something that is very interesting. Every zone has a unique currency, and so it makes it, first of all, by that it makes it easier for funds to move across. There are no currency exchange barriers, forex barriers, and things like that. So, and I think one of the things that the central banks have tried to do, which is greatly accelerating the financial inclusion in the area, is that they've been able to set up these structures that are in charge of doing the cross-border payments, what they call in French interoperability, across the different areas, such that be it wallets, be it banks, be it cards, through a unique channel, you are able to access all the partners, all the players in the ecosystem at the same time. And it's true that we have two zones, the West African zone, the West African Francophone zone that has 8 countries, and the Central African zone that has 6 countries. But both are really similar in the way they do the things. And if we look at what the GMAC is doing in Central Africa region and what the GIM-UOMA is doing in the West African region, it's almost the same thing. And the two, in the near future, are getting into another process of putting themselves together so that with one entry, you have access to all the operators, all the players, all the banks that are able to process transactions in the system. Because one of the things too that acts at times as a friend in addition to infrastructure is that when end users have the wallets or they have the funds reach their wallets and so on, the services are not properly developed where they can actually consume and use these services, and so like the payment infrastructure, the merchant system, the merchant ecosystem, and so on. So I think a lot is being done on that side to unify the merchants such that irrespective of the operator you have, irrespective of the bank where you are found, you can actually pay or use your service or use your wallet anywhere, which I think is something that is very interesting happening in the area.
So we already touched on the subject of trust, because I believe that without trust in the system, there will no fintech be very successful. And GSMA actually had a report out a few months ago about languages, which really increases trust. So now I'm pitching for one of my companies, my portfolio companies, which is Batasia, because we believe that in Africa you have 54 countries, but you have 3,000 languages. And so many people are not really fluent in English or any of the other colonial languages. And how are you going to send money if you don't really understand? So in Batasia, we are building large language models for African languages, and that are really good, because I think if you are sitting in some village somewhere and you need to use a French app, you're not going to do it if you don't really understand it. What do you think about that? Would you have to go into all these countries, all these languages, all these dialects?
I think it's an interesting one if you can have a unified system that permits every user, wherever the user is found, to be able to how can I operate with a language of choice. Because in most African countries, as you rightly said, we have this issue of people not properly informed or who are not properly educated, because at times because of barrier languages. We have a lot of solutions, a lot of services that are out there, but which are not properly exploited because people have the barrier of languages. Today, there's AI that is coming in, and with what you're trying to put up, is going to be interesting if somebody in the Hausa language or the Wolof language can say, okay, send money to my mother in the village, and it happens automatically without maybe having to press buttons or download an app or do some extra stuff that needs maybe some educational knowledge. I mean, so I think it's something that is very interesting, and it could foster financial inclusion.
I can pick up on trust as well, because language is important, definitely. I think what's also really important is as close to instant settlement as possible, because if you say you're giving me money and I get it and I see it immediately in my account, then there's more trust. If I've got an ability to refund or repudiate a transaction, there's more trust. The point about choosing what currency to actually send or receive in, so that I actually get that value, not some unknown value where some currency conversion is going to take place and someone's going to steal some of my money. So there's lots of those initiatives that need to instill trust. But there's some nice regional programs coming to the fore, because the G20, for instance, they've identified that this is a really good initiative to drive financial inclusion. So they're on a mission to drive down costs by 75% over the next sort of 3-4 years. And then there's initiatives like the Pan-African Payment Settlement System, because you've got 50 countries in Africa you've got about 40 different currencies, and you've got to try and manage and settle for all of this and ensure that there's liquidity in each of the currencies you're moving money from or to. So there are some really good regulatory initiatives that are coming to the fore that people need to start adopting. We spoke earlier about the ISO 2022 initiative for higher value payments and moving instant settlements and getting someone like SWIFT to adopt that. There's also really novel new technology initiatives beyond mobile payments that are leveraging the card rails, because the beauty of the card rails is the associations have spent many, many years putting trust into the system through the rules. And that's what you pay for when you use your Visa, your MasterCard, or your Discover card, or any of those other card rails. They're formal rails, but they've got rules, and they've got repudiation, and they've got refunds, and all these other things, which is what you pay for. The challenge is to try and get those costs down to make it relevant for Africa, because you can't charge in US cents for a transaction when you're trying to send a small bit of money to an African. So, as close as you can get to free or frictionless payments, person to person. But there are technologies now leveraging the card rails or emulating those rules through mobile wallets and other initiatives.
So maybe I can ask you, Sebastian, because we talked about it before, with all these different areas, with all the different red tape, so what is your strategy to go international into all the African countries? You didn't want to cross all those hurdles yourself. How are you going to do that?
Yes, so just one quick point on what Anton just said. So the beauty of the card rail is they're entrenched everywhere. Right. So you can start operating literally and service those customers in all those countries. Now, there is the instant payment system, like the pay-by-bank systems that are developed, but it's only domestically. So the challenge, this is why the regulators are coming together, is how do we make those rails available for cross-border transfers? So instead of using the card, using the transfer as one means to drive the cost down, because currently the card costs are quite still significant. So in terms of our strategy, because of the fragmented situation in Africa, we as a fintech realized that we didn't have the means basically to invest and get licensed in all those countries. So we've gone the way of partnerships, and we've partnered with a lot of operators that are pretty much other fintechs doing similar things that we do, maybe not in our specific niche market, our one being travel, but enabling us to use their rails to service our customer. At the end of the day, the objective really is to have any merchant in Africa coming to one service provider that can support them, whether they support them directly or making use of various partners in the back, it doesn't matter. It goes back to the point of trust. If they use your system, you need to be able to service them, and it doesn't matter who you use as long as you keep your customer communicating with your customer. So when you said, for example, when you take a payment, currency is a big factor. Language is a big factor, even for European markets. I mean, just on our payment page, we translate this, translating the error message you get from the bank so that it makes it clear. And just another example, coming from the card payment industry, especially on the travel side, there's a lot of Americans coming to Africa, and their cards are often being denied because the issuing bank has not enrolled with 3D Secure, for example. So now you've got a small merchant here that's worked spend a lot of time trying to get this, $10,000 payment, and it keeps on failing. Where we trying to add value is how do we then take the hand of the customer, trying to explain to him what he's got to do with his bank to be able to process the payment. So my hope is that with the technology, like we're talking about the ISO 2022, more data, the banks would have access to more data, so the payments can flow more without as much friction as they do currently. Because the one 3D Secure, for example, brings quite a bit of friction. It brings security, but at a cost of friction. So yeah, that's. But to go back to your question, yeah, our view, partnership. We won't be able to build it on our own. So we've pretty much literally partner with more than 10 fintechs in Africa. Yeah.
Thank you. Collins, maybe I can ask you, what do you think is the role of the big banks, the old-fashioned banks? Are they becoming obsolete because of this industry? Are they hindering your work? Are they helping your work?
I think it's a very good one. The big banks have a very major role to play because we're talking of trust. When it comes to trust, there are those that are actually being trusted by the customers at the moment, or they have a more a trust ratio. And I think it's very important that if they get into the game, then it will accelerate the process. But there is a major key player in the process that is often neglected, the legacy core banking providers for the banks. Because from my experience in the sector, at times, some of the banks may be willing to accelerate the digitalization process, but their core banking providers are not going at the same speed that they want to do. And so sometimes in our area, one of the things that we try to do in the beginning is that we started assisting banks to do the open banking. It means we talk either with the core banking providers or we ourselves, we started helping banks to provide them the technical solutions that will help them go digital, and from there they can actually expand. Another thing is the business model of banks, because we know everything is all about business, and they want to make more money. I mean, and making more money means looking at where you can make maybe more profit with less expenditure. It's true that digitalization comes with a lot of cost, and looking at the old models where they are mostly doing their lending, treasury operations, all those other services which are not necessarily digital. Some bank executives prefer to focus on what is giving them more money at the moment than what they will need to do much more investment and have the revenue in long term when they may no longer be the execs. And so I think to an extent it's a matter of policy at the level of the major banks, those in charge, the policy makers at the level of the major banks, need to come to the understanding that they have a major role to play in accelerating financial inclusion and accelerating cross-border services. The other players who, as I mentioned, core banking providers, to need to know that they have a major role to play, because if they are not there to provide the services to the banks, even if the banks are willing to accelerate the cross-border services, the financial inclusion, they won't be able to go at the pace that they want to do. So banks effectively, they have a major role to play, and I think if they come in, it will create a lot of trust. In Francophone Africa, where the central bank has been able to put up that framework for banks, operators, and everyone to come on board. I mean, when the banks come on board, by the time initially they were just operators, but when the banks started coming on board, it created more confidence to the platform, and that is when we had more users coming on board and more transactions and things beginning to happen.
I can vouch for that because we're seeing it firsthand. So one of the businesses that we work with is Cybrin, and they're a fintech, but they enable tier 2 banks, so most of the banks in Africa, I think they work with about 100, to leverage a low-code, no-code platform to integrate their legacy systems with the new digital world. So they've built really good onboarding workflow systems and KYC systems that can plug into legacy bank systems. They've worked and actually partnered with the Gates Foundation and built a fraud and risk prevention platform called Tazoma, which is a really powerful platform, which if we can get it adopted across Africa, you know, the more people that are in payments that leverage the same fraud prevention sort of AI data engine to prevent fraud and risk, the more information comes into the system, the more secure it is, the more trust it introduces to the solution. So not only do they help banks get into the new digital divide, they help with the onboarding and KYC, so you know your customer, you know who you're dealing with, and they help with fraud prevention and risk mitigation through the advent of AI. So, you know, there's a lot of new technology. We mentioned mobile wallets, but AI, which is really helping bring trust and managing fraud, and then APIs, you know, enabling all these different fintech businesses are creating really novel solutions and then providing an API so a legacy bank or other provider can just integrate to that solution to use that point service digitally and seamlessly. And that's why we're getting sort of things speeding up in the space.
Well, just going back to the subject of this conference, which is actually venture capital, I would like to hear all your opinions about, because you said something, you thought there was enough liquidity on the continent for this industry, which surprises me a little bit. But how can we unlock more startups? How can we, empower them? How can we make them successful? And what is the role that you think that, for instance, MasterCard, Visa, and those guys are playing? And can we get them to do more for these young entrepreneurs to get really be part of the solving of the problems? Maybe I can ask you, Sebastian, first.
No, I would say Visa is driving quite a few, Visa and MasterCard, they're driving quite a few initiatives where they're trying to engage directly with startups. Maybe South Africa is a little bit different from the rest of Africa in the sense that the banks are really powerful here, where Visa and MasterCard will go more directly to the fintechs in the rest of the countries. So what can be done? I think it's difficult for me to give an answer because South Africa is very competitive in the fintech space on the processing side. So that's another element. Fintech encompasses many, many different fields that makes an operator being able to operate. The core is the processing, but there's a lot of stuff around it. But from me, I don't know, from an investment side, I would say it's been fairly limited. And I would say, especially the last couple of years, but my understanding is that there'll be more capital to be deployed in the coming years. And I think it's, and also there's a feeling that the banks are willing now to engage with startups. You know, there's open banking initiatives that are coming and are getting pushed through by the regulator now. So you have to comply. And that will provide a lot of other opportunities, a lot of business models, because as a fintech, for example, in payment processing, we're looking at how to diversify and to not only rely on the income from processing a payment. And those opportunities will come from the open banking initiatives.
Anton?
Yeah, so I think you misinterpreted my liquidity comment. That was on cross-border, because whenever you do a transaction, if you're moving rands to Naira, on the one side you need rands, and on the other side you need Naira, and you need someone to accept the rands and someone to pay the Naira. So you've always got to be able to balance that. And that's also being solved by other mechanisms like, on the blockchain, Bitcoin and other cryptocurrencies, CDC type currencies. In fact, we've got a fintech startup, Troy Gold, that actually leverages gold. So you can buy gold here and send it to a friend, and they can sell gold there, fractions of gold, which they actually hold and digitize and secure for you on your behalf. So there's different ways of solving for that liquidity. But from an investment perspective, it has been tough the last couple of years. That's been the world over. But it's more tough for Africa because traditionally we've tripped ourselves up. And not all governments are as honest as others, and not all players are as honest as others, and there's sort of grey areas. So you've got to build responsible businesses, and you've got to iron out corruption across Africa, and really support proper initiatives, which is where the banks are really good. It's a very regulated environment, and that's why cross-border, it's expensive because it's very regulated. There are a lot of people that try to go above and beyond and around the systems, but as long as you build businesses that stick to the rules, then the investment will flow. As soon as there's confidence in the businesses and what they're doing, and that they are playing by the rules of the countries or the associations, the money will flow. So you've got to build trust from an entrepreneurial perspective, from a business perspective, but from a social and a political perspective as well. And then there's got to be confidence in the socio-political landscape across Africa. So you need stability. We've seen in South Africa, just past these elections, the confidence has come right back. Just ahead of them, there was a lot of angst, and people were holding back on putting cash into new investments. And that's on the investment side. But I think the guys that can really step up and play are actually the banks. They're sitting on a lot of capital. They should make it more readily available to their clients to grow their businesses.
Yes. Last word for you, Collins.
Okay, so I think just in line with this point, from my personal experience building businesses in Africa, startups principally need two things, funding and networking. Networking, that is openings to business opportunities and so on, and then funding, as we were talking about. We know that in the recent past, most of the fundings, what has been coming in through VCs, comes through the GFIs and so on. But we have a lot of hidden funds in Africa, within and without. I mean, Africa has got a lot of potentials that if we Africans decide to come together, there is a possibility of certain funds that can help one another. We have the case of, if you look like, for example, what the SACCOs are doing. In this part of Africa, they call it the SACCOs. In the other part, they call it credit unions, where they come together and they try to fund each other. We've known a lot of companies, a lot of businesses that have come up through that, but that's at I would say, low level, because it doesn't go up to, in fact, they don't become unicorns, I mean, to an extent. But I still believe that, as I said, within or without, there are a lot of funds. Africans have got funds maybe that are hanging maybe in foreign reserves, somewhere that if the powers that be can put the regulations or the rules to let Africans have some of those funds that are hanging in foreign reserves, it will very much help Africans to develop and move forward.
You're preaching to the choir there. Well, gentlemen, thank you very much. And thank you, audience. You were very quiet. I hope your lunch was good, and I hope you still enjoyed our panel. Have a great summit.